Hey guys, it's Kevin DeSilva here with the Living Los Angeles channel, and today I'm interviewing Adam Wessell. He specializes in asset protection, and right away I knew I wanted to hear all about it and how you can protect your assets to make a better financial future. So,
Thanks for having me on, and I'll be glad to give you any information you need for you and your clients on asset
yeah.
protection.
So walk me through a little bit. Asset protection is probably a very big category, right? What exactly do you specialize in?
Yeah, definitely. So we're the nation's, or well, I guess the world's largest asset protection company, and we really specialize in offshore structures. We do both domestic and offshore. We've actually set up more offshore trusts than any other company in the world, specifically
Wow.
with the Cook Islands.
Hmm.
So we really specialize in that. Of course, we do a lot of domestic structures as well.
Hmm.
And difference between offshore and domestic, I guess if you're in the U.S., I'm pertaining to the U.S.
Yeah,
So, we structure trusts, LLCs for purposes of asset protection and also estate planning as a side benefit.
got it. So you do asset structuring both domestically and offshore. What are some of the benefits of doing this?
Yeah. So, I mean, the benefits of doing this are specifically for civil lawsuits. It could be things like, say you get into a car accident and someone's
Hmm.
coming after you for a frivolous amount. It's
Hmm.
going to protect you. And also even divorce. Really, any civil lawsuits is what we handle or
Got it.
divorce. So.
Now, I'm just throwing, just spit firing back and forth because I know that insurance people talk about, having umbrella policies and having insurance for this in case of lawsuits. How is this different from that kind of protection?
Yeah, sure. I mean, I think that insurance can still be beneficial even with asset protection. Now, there's a lot of times that clients call us. I mean, we get these calls every day where
Hmm.
someone had an insurance policy, umbrella insurance, and they're not really paying nearly as much as what the creditor is coming after them for. So,
Hmm.
it's really doing an asset protection structure ensures that your assets are completely untouchable by the courts.
Hmm.
Whereas insurance, you're kind of relying on a bunch of fine print, and you're kind of hoping they actually cover what happened, but a lot
Hmm.
of times they don't. So, with this, you're in full control.
Got it. Got it. So we're talking about offshore. Like, what are some things that you can protect? What would when you come into a client, what are you looking for, and how do you structure it?
Yeah, definitely. So when we're looking at a client, with really any asset of value is what we can protect. So that could be real estate, cash, brokerage accounts, retirement accounts, and vehicles.
Yeah.
Really anything of value. It could be precious metals.
Wow.
So first thing we want to look at is what type of assets the person has. What the value is,
Hmm.
and we'll look at of those assets what's already protected, right? Because
Hmm.
the person has a primary residence in California, equity is less than 700,000. Depending on the county, that's the maximum amount of homestead protection, which is the amount that's protected from creditors in a lawsuit. So let's just say a person had a home in California or worth with $700,000 equity, and then they had a 401k, and that's really all the assets they had, maybe a little bit of cash. Even if there's a bunch of millions in their 401k, and their home is worth 700,000, well, they're
Hmm.
majorly protected. So there's not really much for us to do there. I mean, we could set up a living trust, um,
Hmm.
but yeah, what we specialize in is complex asset protection structures. So people that come to us that they might have just been served with a lawsuit, they have a few million in real estate, um, maybe some in a brokerage account that's not a 401k, because in California IRAs are not fully protected, so that's
Hmm.
there as well. Um, and then some vehicles, maybe some companies. We can structure that all in. Looking at this, and this is again a very example diagram, but it,
Yeah.
it can look very similar to this, where we essentially will do both an offshore and domestic structure, and it's really going to depend on the client, right? If they're really just facing this lawsuit and they are just wanting everything protected with the least amount of components, we might just do something offshore. But
Yeah.
it's certainly beneficial to do both offshore and domestic.
Yeah.
So looking at this from the top down, you might have an offshore trust that might be in Cook Islands or Belize. Sometimes we do Nevis. Rarely, though, it's usually Cook Islands or Belize. Um, with that, we'll have we'll go with we'll show the Cook Islands for now. That's the one we go with the most. So we'll have a Cook Islands trust that
Hmm.
owns a Cook Island LLC.
Hmm.
That's up at the pink box there.
Yeah.
So that LLC is really what gives the client the string of control. So they serve
Yeah.
as the manager. And if they get into a lawsuit, well, you have a Cook Islands trustee who could step in as manager who's
Hmm.
outside the reach of U.S. courts, right? So that they don't have to comply with a U.S. court order.
Got it.
Um, so the reason why we have them separated, you want to have two, if we're going to be doing a domestic and offshore structure, which is what we usually suggest, will really the only thing that offshore LLC is going to own is an offshore account. There's some specific circumstances where it also might own a U.S. company uh, if it's a C corp or an
Okay.
Texas C corp. And again, I can't give tax advice. I'm not licensed to do
Yeah.
that, but just generally, we might end up doing that, just depending on the situation.
It's what you've seen.
Yeah. So with with that, with the domestic entities or with the domestic assets, say your real estate or vehicles, all of that, you don't want that owned by an offshore LLC
Yeah.
or offshore trust,
Okay.
because then you run into a lot of issues. Well, first off, U.S. courts, they can still take U.S. real estate. So
Yeah, I was gonna say, like, how does a house end up in an offshore account?
right. There's a different way that we protect it. That's a question that we get a lot. Why can't I just put the property inside the trust? And then you run into a lot of tax issues. And then also it doesn't really protect it because the U.S. court could just say, I don't care that this property is owned by an offshore entity. It's located here. I'm going to apply the laws here.
Yeah.
So instead, what we do is something called equity stripping,
Mhm.
and that you can see in the red line here with the liens. So we'll do something called a equity line of credit mortgage recorded against the value of each property.
Mm.
That way, it shows that it's leveraged to the hilt on paper, or on the title.
Mhm.
There's no money changing hands there. That's just what we do initially. So
Mm.
usually that's enough to protect yourself from creditors or prevent creditors from
Mm.
coming after you because there's not much value to go after there.
Yeah.
Uh, so if necessary, we might pull a third party lender in, say they're in a deep lawsuit, and
Yeah.
the plaintiff finds out that there is no money changing hands. It's just a friendly lien. We might have a third party come in and actually legitimize that lien or collateralize that lien.
Mm.
And so you can basically pull out the equity from a home via a third party lender and put it into your offshore account, which is completely untouchable by U.S. courts. Make
Yeah.
sense?
Yeah. No, I get it.
Yeah.
So
Um,
basically, by having that lien on the property, you essentially eat up the equity and make the property not valuable to whoever's coming after it, right?
exactly. Yep.
Yeah.
Yeah. So
Okay.
it's just completely not worth it for the creditor coming after the property.
Yeah.
Um, so in addition to that, we'll want to set up separate LLCs for each property in the state where the property is located, or
Mhm.
land trusts. So one or the other. There's some reasons why we might use a land trust with an LLC as the beneficiary.
Okay.
And then in addition to that, with this diagram, just to go into this briefly, we might have a holding company. Best state for that is Wyoming because it's
Yeah.
private. So
Oh,
they have protection for single member LLCs.
cool.
Um, and another important thing on the domestic side is having the living trust that
Mm.
owns everything, like in terms of ownership, just for estate planning purposes.
Yeah.
Cook Islands Trust does have estate planning built in, but that'll be for
Yeah.
the estate plan for your offshore account. The living
Yeah.
trust will serve as an estate plan for any domestic physical assets.
Okay. So very complex, and the idea here is to protect the assets from frivolous lawsuits, right?
Correct.
Would I benefit from having a living trust?
Oh yeah, yeah, definitely. I mean, I think everybody should have a living trust. So if something happens to you, even if you have not that much in the way of assets,
Yeah.
or not saying you, but someone.
Yeah, yeah, plural you. Yeah, I get it.
Yeah. So that would be, yeah, it's definitely beneficial to have because if you don't have a living trust, any assets that you have will have to go through probate. That's very tough.
Mm.
That'd be very tough on your family,
Cost,
and it could
not
take
cost effective.
months to a year. You're paying a bunch in attorney fees, and it's really, yeah. So living trusts definitely essential to have. I mean, I think everyone should have that.
Okay.
Yeah.
Now, let me ask this question. I own my residence. Does it make sense for me to put my own personal residence into an LLC?
No. So well, it really depends on the amount of equity that's in the home, right? So
Yeah.
I'll say, it's hard to give a specific number, but in California, there's a homestead exemption, which is the amount that's protected from creditors in a
Mm.
lawsuit. That if you put the property into an LLC, you lose that homestead protection. It's no longer considered a primary residence.
Ah,
So yeah, I mean, it could be beneficial. If someone had $3 million equity in their home and
yeah,
they're living in LA and only 700,000 is protected, well, yeah, then I think that an LLC could be beneficial for that property.
got it.
So
Got it. Yeah, I always wonder when I see some homes that people live in that are owned by the LLC and sometimes they're not. And, maybe there's some other tax aspect where their
yeah,
company owns it and they rent it from their company. I won't get into all that.
yeah, people do it. I mean, I know some people do it for tax reasons, right? They might be renting it out.
Yeah.
They might be paying rent to an LLC, basically. That's again, I'm not in the tax world, but that's
Yeah.
yeah.
No, I get it. They're tax. Hey, look, I sell houses. I help people buy and sell houses, and I understand the tax benefits of owning a home. Your primary interest deduction, your being able to deduct your property taxes up until a certain amount. Same with the primary interest deduction, which is basically the interest you pay on your loan for your primary residence. When you go to sell, your first $250,000 is exempt. If you're married, the first $500,000 of capital gains is exempt. Like, hey, look, I'm not a tax professional, but I get it. And let's say I'm thinking about buying a house, but I actually have a lot of assets, right? Let's say I've been working in this company, I get a lot of company stock. My net worth is well over $1 million or $2 million. I'm thinking there's actually a real life example of a client that I recently helped where they didn't own any property yet, but their net worth was way higher than mine. That I own property. Do you do asset protection in that situation?
Yeah. So, I mean, 401ks have federal protections in place. So,
Okay.
and also 401ks already work like a trust, right? Because you can assign a beneficiary.
Yeah.
So, there's not really much we need to do in the way of a 401k
Mhm.
unless it's divorce, right? If there's a divorce case, it's still touchable, depending on the circumstance.
Yeah.
It could be considered premarital assets, in which case it's not. But the, yeah, 401k generally is protected from any civil lawsuit. IRAs in California have very minimal protection, so that there's certain ways that we can protect IRAs as well. But yeah, with the brokerage account, it's very straightforward, right? If he has millions of dollars in a brokerage account, then yeah, I would certainly recommend setting up a offshore trust structure, specifically in the Cook Islands. And he can actually, we can set him up with a brokerage account offshore that he can transfer those stocks in kind to an account.
Wow.
We actually utilize some Swiss banks. There's a few jurisdictions that we utilize, Cook Islands, Cayman Islands for banking. So the structure can be in one jurisdiction and the bank account can be in another.
Interesting.
Yeah. This is actually, even though it looks different from the diagram I was showing before,
Yeah.
this is, kind of more, shows you more specific, kind of the meat of the diagram. Where you still have that Cook Islands Trust, Cook Islands LLC. And these are just the different type of ways that we might protect a type of asset. So, your primary residence, because you don't want to put that into an LLC, you can still maintain homestead exemption and all the other benefits of owning a primary residence via putting it into a land trust. And then we might have the beneficiary as the living trust. And the reason why we want to use a land trust is to keep the property ownership private, because with a land trust, you have, it doesn't appear in the public records as, with your name. It's just going to show the name and doesn't show the beneficiary, the grantor. So that's why, with a land trust, we can do that for primary residence. It's just that you have to remain as the beneficiary, or your living trust can, to maintain protection.
Yeah.
But the trustee, since that is public record, we usually set up a private LLC as well.
Okay.
And specifically, we recommend the state of Wyoming.
Yeah.
So
interesting. Very cool. And then, so as far as the rental property, you would also do a land trust, and the beneficiary is the LLC.
Yeah, for maximum privacy, I would recommend doing a land trust because, if you have it directly into an LLC, people might still be able to see the manager in the public records.
Interesting.
There's an option to choose a nominee. But land trusts are just overall the most private. It can still be the beneficiary of that land trust, and the beneficiary of the land trust is the liable party. So that's how we can separate a property from the rest, and it still be private and held in an LLC. And we can do the same thing for a commercial property. But yeah, a lot of times, and there's a lot of reasons why we might not put it into a land trust. I won't go too in depth there. Typically, with a commercial property, we could just put it directly into a LLC, just have the manager as a nominee.
Interesting.
So
it seems quite complicated, but also very thorough. So it sounds to me, not only do you get asset protection, but you also get privacy.
Yes, exactly. So with this, you have everything in separate LLCs. That's the goal here with properties. You want to put it in separate LLCs, have it feed up to a jurisdiction that has strong LLC laws like Wyoming. And ideally, we'll want to do an offshore structure to actually leverage the property via liens. Okay. Because a lot of times LLCs are penetrated. It happens very often. Yeah. Maybe they were able to argue that personal and business assets were mixed. So an offshore structure with the liens, that's going to, regardless of if they pierce the LLC, properties are fully leveraged to the hilt. So there's not really any equity for the creditor to come after.
All right. Thank you for being on. I found this very informative. I feel like it's just like the tip of the iceberg. We could probably spend some more sessions on some other stuff if you want to come back. Just out of curiosity, if I had people leave comments below, would you be open to answering them?
Oh, yeah. I'll be more than happy to.
Okay. So if you have a question about how to protect your assets here in the United States, then drop your comment below with your question. I'll forward it to Adam here, and we'll get you answers. If we get enough questions, maybe we do another topic video. What do you think?
Yeah, I'm more than happy to be back on.
Awesome. Well, thank you for being on today. I look forward to the next one.
All right, thanks.